Shares in Leighton Holdings surged 8% today, despite a more than $1 billion turnaround, which resulted in a full-year loss of $409 million. It's been a tumultuous year for Australia's biggest construction company, and the flow of red ink has been well flagged. But what excited investors was an order book totalling $46 billion and the prospect of good times ahead. Tracy Kirkland reports.
Down but far from out. Today's profit results didn't surprise anyone. Leighton Holdings' full-year loss of $409 million was expected, a drop of 167% on last year's $650 million profit. It was a buoyant CEO, David Stewart, who fronted today's announcement, confident the worst is over.
We're through this difficult patch in our existence. We are very positive about the business, and opportunities abound in all our sectors. Work in hand stands at $46.2 billion, and we have a full pipeline of opportunities. There is no doubt the markets we are in are perfectly placed for growth.
The loss was largely due to a series of write-downs. In April, the company reported a profit downgrade, citing problems with several large projects. The Brisbane Airport Link joint venture had been hit by design and access issues, planning problems and Queensland's severe wet weather. The weather was also to blame for costly delays at the desalination project in Victoria. And there were problems with the company's stake in the Habtoor Leighton Group, a Middle Eastern-based contractor. There was no final dividend, but investors did get plenty of details, including strengthening next year's profit forecast. Leighton now says it will be at the top end of $600 to $650 million.
And as we move through the first half of next year and get to completion on Airport Link and VDP, you'll start to see that underlying strength come through, and hence the support we have for the forecast for next year.
Analysts agree the long-term outlook is good.
And we think Leighton's going to be a very significant beneficiary from that work coming out of the mining infrastructure. Albeit we didn't see it in this result, and probably will see some of it in the 2012, but 2013 and beyond we expect to see that a significant uplift in Leighton's outlook on the back of that.
Some, however, were more cautious.
We'd still be looking at some of the aspirational targets and querying whether or not Leighton are still chewing off significant amounts of risk, particularly in the growth of the offshore book. We're still not entirely clear on the intentions of the Spaniards and indeed the Germans and how that plays out at the boardroom. So there are still some things that are lingering in the back of our mind that we'd like to see resolved.
Thank you.
However, most investors threw caution to the wind, with Leighton shares rocketing 8% to finish the day at $21.46.